Hello, folks. Welcome to my channel. It's me. We got some very important news this morning from the labor market. The growth in the labor market is slowing dramatically. The U.S. added just 54,000 jobs in August, according to ADP. This report comes out before the official jobs report from the government, which is always released on the first Friday of every month. So why do we care about the ADP report? Well, because it is usually pretty close to the actual numbers that the government releases, and this is important because it gives us a preview of what is going on in the labor market. And it's not good news. Let's take a look at the details. Private sector companies in the United States added just 54,000 jobs in August, much lower than the 180,000 that economists were expecting. So that was a big miss. The job growth was widespread across all industries, except for construction and manufacturing. So those two sectors actually lost jobs. In July, the U.S. economy added a whopping 324,000 jobs, which was much higher than the 250,000 that economists were expecting. But now we're seeing a sharp drop in job growth. And the reason is simple. There aren't that many people left who aren't already working. We have an extremely tight labor market right now with very low unemployment. So it's getting harder and harder to find new workers to add to their payrolls. Also, if you look back historically, you can see that during recessions, job growth turns negative. So companies start to fire workers rather than hire more. The last time this happened was in early 2022, when the economy was starting to slow down. So this is a sign that things are starting to cool off again. Here's a quote from the ADP statement that I think sums it up quite well. Widespread job growth across industries is a positive sign, but the overall numbers suggest that labor market momentum is waning as we head into the final months of the year. And that's really the key phrase here, folks. Labor market momentum is waning. They're trying to be nice and say it in a nice way, but basically it means that the labor market is starting to cool off. Now let's take a look at the other data that came out today. We have the weekly jobless claims report. Now this report shows the number of people who went to collect unemployment benefits. And the details here are really interesting because there are two different types of people who go on unemployment. You have people who lost their jobs through no fault of their own, like they were laid off. And then you have people who quit their jobs. And usually, the number of people who quit their jobs is a really good gauge of how the labor market is doing. Because if people feel confident about their ability to find a new job, then they're more likely to quit their current job and take a risk and try to find something better. But if they're worried about losing their job or being laid off, then they're less likely to quit. Well, we can see that people are still quitting their jobs, but the numbers are coming down. And if you look at the 4-week moving average, which smooths out some of the noise in the data, you can see that it has been relatively stable over the past few months. So again, this suggests that people aren't too worried about losing their jobs. But we have to put these numbers into perspective. Yes, it's true that people aren't rushing to collect unemployment benefits, but that could also be because they don't want to lose their employer-sponsored health insurance. Many companies, especially smaller ones, don't offer health insurance to part-time workers or to workers who have been with the company for less than a certain amount of time. So if you're working a part-time job or you just got a job, you might not be able to qualify for unemployment benefits. But you also probably don't have access to health insurance. The solution here is obviously to get a full-time job with benefits, but with the labor market starting to cool off, it might be harder to do that in the near future. So folks, I hope this gives you some insight into the latest jobs report. The big takeaway is that the labor market is starting to cool off. Job growth is slowing down, and that could be a sign that the Fed's rate hikes are finally starting to take effect. If you enjoyed this video, please give it a thumbs up. It really helps out my channel. And make sure to subscribe so you never miss one of my videos. Thanks so much for watching, and I'll see you next time.